Hey, what is up guys? Welcome back to ProTraderPath. I'm back with another video. Now the video I'm going to share is actually something that I have given access to a very few people. As you can see, I had the video unlisted and it's been up there for since January 31st, but a very few people from my Discord group had access to this information even before the video was created or made, and it took me a little time for the video to record and to edit and finally post it on my YouTube channel as unlisted for few more people, few more selected people. As you can see, like I don't have any title or anything, it is just the homework, the best strategy ever, this sort of thing. Anyway, I'm gonna recreate the video for everyone over there because this video was 2 hours and 12 minutes long. I'm going to make it shorter with the informations that I am willing to keep from this video, and I'm gonna make it public to everyone. The reason behind that is, even though in this specific video, I actually took a little bit of promise from a lot of people that since I'm giving or I'm trying to help you all for free and without any expectations but the promise and the work from you guys, some of the people actually disclosed the information, and hands after hands it went to some people with big like big following on Twitter, on YouTube, this sort of areas. This video is actually published or leaked somehow. So since that happened, why not everyone in the channel who are watching me getting the information or the help that is required for other people to get? Why not that happening for everyone? Anyway, since I'm gonna recreate or edit the video to the parts where it is important, I will try to tell you guys that once you see this video, once you watch this video, please do not jump into trading with the strategy, because if you don't understand a few things, or if you don't practice it for at least a couple of days, it will be hard for you to find the actual thing that I'm going to talk about, or it will be hard for you to actually trust the process. As a result, you will be missing out on opportunities, or you might be framing the wrong setups. So please, whatever you see, whatever you watch, don't just blindly start to take trades based on that. I would suggest you to first backtest or forward test those and then go for the setups. So yeah, without any further ado, let's start with the main part. Now let me say something. Whatever I'm going to give you now, you will only be focusing on those things. Nothing else will be counted, or nothing else will count as the PD array that I'm going to give you. That's number one. And you will not use any other PD array while you are backtesting or forward testing what I'm saying right now. Now, while you are doing it, of course, like it's up to you. I'll be sharing you the journaling process. I have created a Microsoft Excel file where you guys will be able to journal it the way I was doing it. If you don't want it, you can create your own, whatever suits you the most. But the informations I have put in that Microsoft Excel file, what I will do is I will either put it or upload it in a Google Drive and share the link with all of the selected people who will get the video link, or I will give you the file while I will be giving you the link in private message of your Discord. Now, if I miss for anyone, please feel free to let me know so that I can forward it, or yeah, like I will tell someone else to forward it to you so that you can have that file. Anyway, if you have to add any comments or anything in that file, you can do that. Now that part is clear. Number three, or another thing that I wanted to say is, what works for me may not work for you, because we are human. We have different characteristics. We have different way of seeing things. We have different way of thought process, I should say. So if it doesn't work for you, what you do is you ignore. You at least try with something that didn't work for you. So you move on to the next one. Even you can leave me, no problem. But I am not going to take any responsibility because I don't know how actually you did your homework, how much effort, how much attention you paid to what I'm saying, what I'm going to show, or what I'm gonna share in a couple of minutes. I know it's a big introduction, but it's important. Risk management, that's solely up to you. I cannot help with your risk management. Once you get your backtest data, once you get your forward test data, you will know how many times it works or how many times it doesn't work. It's not about how many times, I will explain it throughout the video, but anyway, you will get the point that what is your win rate using this concept or using this idea, and how much you should be risking depending on that. Do not blame or put that on me, or I have no way of helping you with that. It's up to you. For example, if you're using a top step account, for me I use that. So let's say you have a 50k account, but your actual maximum loss limit is 2k. So if your strategy has, let's say, 50% win rate, okay, or if this strategy that maybe I'm going to show you, and after you have done your work or job and come back to me with the result, I can re-modify it, or I can help you filter out the bad sessions or sections from this. I have a lot to say, but I'm not disclosing everything regarding this strategy during this homework. Once I see your homework, I will be discussing with all of these specific group of people or number of people that how you can avoid certain things, what during a session or what during a period of time may happen, and how you can avoid a losing trade seeing those type of things happening in front of you. But this time I'm not going to disclose it because it's your homework. So homework needs to be done the way you are doing it, then I will be correcting you. I hope you got the point. Since you guys selected me, or you guys like me as your teacher or as your mentor, I'm doing the job the way it should be done. So yeah, and that's for free, of course, don't forget that part. Anyway, so that's been said, the last thing that I want to say before I actually go to the main thing, which is this is just to find out the best on, or the best ones, maybe more than one, that suits your timetable, that suits your daily schedule or schedule, and you can sit in front of your chart during those times. So it's to find out that specific part for yourself. I'm not gonna say anything else. Let's jump straight into it. So about the risk management, let's say you found this strategy works 50% of the time. So for a 2k account, I would suggest you to give yourself at least 10 to 15 chances. Okay, so that can be like $200 per trade to 75 or 175, something like that, whatever. I hope you got the idea. Like, give yourself at least 10 to 15. The higher it goes, or once you make your initial max loss limit to a certain level, once you grow that loss limit, you can increase the risk from here, but still keeping yourself those chances. So what do I mean by that is, let's say once you complete a challenge, or once you are in a funded account, you can maybe from 2k max loss limit, you can build it to maybe 3k. Now instead of $200, you can maybe risk $300, or instead of 175, you can now risk $200 to give yourself 15 chances, something like that. So I hope you got the point, the risk management point. This one you have to calculate. Listen, you don't have to complete a challenge in 1 day. You don't have to complete a challenge in 2 days just because you can, or just because I can. It doesn't mean you have to do it the same way. You have 20 days worth of time, even $200 risk per trade, and 1:2, which is $400 profit. The $3,000 is not a huge time that you need to get to that level. And the thing that I'm going to show you, you will understand once I go to the chart. Now, I have already talked for nearly 10 minutes without showing anything, and I will just show you all the hindsight data, and some of my executions I have already shared in the Discord. Maybe after I discuss these things, you can maybe go in Discord and look for the screenshots, the entries that I have shared so far in maybe last couple of weeks. Okay, and you will understand what I shared over there. Anyway, so let's jump to the time. It's about the macro, but don't get to the conclusion. It's every 50 minutes and 10 minutes of each hour, which is, let me actually remove this one. So yeah, it's about the macro. The time you're looking at is every 50 minutes and 10 minutes of each hour. What do I mean by that is, let's say 9:50 a.m. to 10:10 a.m. So that's what I mean by that. Okay, this 20 minutes. So macro, but there is a but. Okay, I'm not trying to give anything to that is already presented over there. I'm trying to give something that will help you identify at least the direction, or let's continue. Anyway, so every 50 and 10, we all know about that. I hope by now we all know about that. Now, if you are using the London session or the London macros, since the silver bullet starts at 3 a.m., and that's my only and the best ever strategy that I ever shared, using the information, you might get a better entry and quick exit even before other people can, identify the silver bullet entries. Using the information, you can do that, but do not take the trade. I have already, like, okay, let me actually share the where is it? Let me share the journaling and like the journal file. Okay, so it's all about the macro, but what I did is here, if you can see how I created it. I don't know if you can see everything or not, but let me actually zoom it a little bit less, zoom it out. So you are taking all the dates. What date? Now, if you are using this page, which is the first tab, you can see I have created multiple tabs over here based on all the macros. Okay, and there might be some more on the right. Okay, so all the macros I have created over here, and I have left some note inside as well, but not that important. But anyway, I'll go through them. So if you're using all macro tab, this tab, so I hope you can see my pointer. Okay, so here my mouse pointer is where it says all macro. This is one single page where I don't have much to talk about. You can write down the sides that you have taken your entry, for example, long, short, whatever it is. The date is very important. The risk to reward, you can either write down the amount, whatever you are risking and whatever you are getting. Maybe if it's a profitable trade, write down the double the amount of the risk that you figured out or calculated for yourself, that okay, I'm gonna take maybe $200 per trade. So every loss you will write down minus 200. Every win you can write down 400. So what it gonna do is, at the end of the day, it will show you what you got. Or for every loss you write down -1, and for every profit you write down only 2. That will calculate as well and show if it's a overall, like after I have put approximately 50 trading days that you can go back and look. Or if you don't have those datas, whatever the maximum you can check, it's all in 1 minute time frame. I forgot to mention that over there, but I will, since I'm saying it, only in 1 minute time frame. Okay, so every loss or win you will write it -1 or 2. Okay, and this will give you the risk to reward, and you will know what's the win rate. Or I can do it later once I get your outcome and output. Now what I want you to do in extra is, every date you are taking or framing a setup, doesn't matter, like from whatever date you have used or started from back testing to forward testing. Do not cheat with yourself. Don't need to be showing just the profitable trades. If you have identified it wrongly or any mistakes you have made, it hit your stop loss, just put that. Okay, like that is the thing that you need to know, so that I can help you to see things the way I see, the way it works for me. Anyway, let's move forward. So you can do that by yourself. You can write it down over here, or in, like, if there is any additional comments that you want to write, you can write directly here, or you can right click and insert comments. If you press that, it will give you the option to insert the comment. Anyway, I don't really want to insert any comment, so I'll just remove it. Either you can do it here, or better if you can do it every tab. Now inside of this tab, I have actually written something over here that if looking for this specific macro, then only look for it after 3 am and according to the silver bullet direction. So whatever I have said, like silver bullet, if it takes Asia buy side, then look for sell short. If it takes Asia sell side, then look for buy long. Or if the market is in between, look for the higher time frame order flow and PDRS that it can retrace and respect, and then it can go towards that higher time frame point of interest, that direction. Whatever it is, I hope silver bullet one you all watched, whoever actually joined this thing, so you guys will know what I'm saying over here. Anyway, yeah, so I have kept this one. The reason behind that is, and the same message is also here, because if it's not 4, then keep it according to the silver bullet direction. But after it's 4, you found a macro setup forming inside that last 10 minutes of the macro, you can maybe go with that. Whatever, I'm gonna explain in between, so hopefully you will understand. Now let me close this one. I will provide it to all of you, so I'll just close it, and I hope I will remember to put it in the description and that. Now I have excluded 2 macros, which is 8:50 to 9:10, because that's close to New York AM session opening, and the AM session opening is very volatile. At the same time, I will talk about something else inside the video, and I have excluded 3:50 to 4:10 because this is the time window where since I trade top step at 4:10 p.m., top step actually closes a entry. So I have taken, or I have tried this macro couple of times before, but most of the time what happened is I got the entry almost around the last couple of minutes, and when it was in drawdown and maybe going towards my direction, top step closed it in loss, or it was going towards my direction, top step closed it in between. So I barely got the opportunity to grab total profit or a loss. And since top step closes, I'm keeping that aside, and after that I never actually tried that macro, so I don't have much of the time. But if you want, or if your prop firm allows you to hold it after what it calls, after 3:10, because it can take longer time. Okay, so that's why if it allows you to hold after 3:10, then maybe you can look for that macro. I didn't even put it inside the PDF, sorry, inside the Microsoft Excel. I'm leaving it up to you, but this is, no matter what, you are not looking into any trade during this time, because New York AM session opening is only 20 minutes far from this one. Not just that, most of the time what you'll see is literally from 9 a.m. market actually does a lot of movement, like there are lots of volatility. So I would love to avoid that one. Now there is one more thing that I actually forgot to write here, but I have it written inside of that Excel file. I will say it anyway, which is if there is a news at 8:30, okay, then avoid that 8:10 macro. So 7:50 to 8:10 macro, because most of the time if there is a news, it either doesn't move much, or it either consolidates, or by any chance you took that entry around this 8:10, close to that time, and it didn't give you the profit yet and the news is there, like big news, okay, like red folder or even medium impact, you can avoid that on as well, but up to you. Okay, it's practice, so do not worry about if you can identify the news time, good. If not, just back test, forward test, whatever the result is, we will see after, we'll talk after, no worries. But when you will be trading your account after all the lessons or all the practice session happens, then we'll have a discussion, we'll listen to each other if there is any confusion or if there is anything that you need to clear before you can actually look forward or look further using this strategy. But anyway, that's that. So if there is any news 8:50 to 8:10 macro, you avoid that on. Or if there is any news, sometimes there will be news at 10 o'clock, so the 9:50 to 10:10, you are avoiding that on. Okay, if news, avoid these two sessions. And if you can identify, but during the homework you don't really need to worry about that. Like if you are just without looking at the Forex calendar, if you're doing it from the back testing part, then go with it. Let's see what's the result comes out. Anyway, that's that been said. Now let's talk about the rules. I'll just remove that cover. The rules are very simple. Must have to take a clear and array, like a clear or a visible swing high or low as liquidity. So what I'm talking about here is, you are looking for a clear swing high or swing low. Let's say it took the liquidity, a stop loss or take profit or at 1:2. For homework, this is for homework and I will talk about it later. But inside I have also already talked, like if you have the time or if you want to do that extra work for yourself, then you can do this. Okay, inside of this I have written, see, let me actually go to the first one, I think. So inside this I have written, like if I targeted any further, okay, risk to reward, I have wrote it this way so that I can calculate. Every individual will calculate it like that way. So either way you can write it there. But if it has taken the, so what you are going to do, instead of giving you 1 to 2, okay, let's say market created this structure, there was a swing low here, but your 1 to 2 comes let's say here, but there was a swing low at this level. Market give you the entry, came back, took this liquidity and then went up and hit your stop loss. If that happens, I'm gonna show you in chart what I'm trying to say here, but just bear with me. If this happens, you can write it down there. Okay, so inside of that Excel file, you can write what happened exactly, like nearest liquidity less than 2, that one is taken, or nearest liquidity greater than 2, that one is taken. Rest greater than 2, partial and runner, comments, additional comments, this can be only for yourself. So that's been said. Execution must have to happen inside the macro. So reason can be happening outside. For example, you see this liquidity has been taken. Now I'm talking about the execution part. If let's say this happened, okay, like liquidity happened outside, even your PD array formed, let's say something here, it formed before the macro, but your entry must have to be inside the macro. Okay, so your entry must have to happen inside the macro. I don't care about execution. I don't care about the thing happened before or inside. So let's say this is the thing. Now take profit, it can happen outside the macro or it can happen within the macro as well. It doesn't matter until it hits your stop loss or your take profit. You are always looking for the same thing. Okay, so whatever it is, I hope you got the idea. Execution must have to happen inside the macro. If it doesn't happen inside the macro, then you don't have any entry. That's been said. Reason can be outside or inside. I said better because if that liquidity grab I don't know why I'm always showing the bearish one, because it's easier to draw. But anyway, if this liquidity grab happened inside the macro, it's even better. Okay, that's why I'm saying like inside is better, but can happen outside as well, no problem. No entry means no entry, no force allowed. Okay, so if you cannot find the entry, do not, remember it's happening every second. Market is moving from one place to another. So you are not spending the entire time looking for a possible entry and forcing it. If you cannot see it at the first time within that window, that means you missed that entry, or you don't have an entry for that window. You are not forcing it. You are not continuously like looking all 20 minutes of candles and then, oh, okay, if I took it here, then I might had a profit. No. So be careful about that. I hope you got my point, what I'm saying. And any entry using any other PDRA doesn't go to the same journal. Do not put anything that you framed with any other PDRA except the one that I'm going to share right now. So don't put it inside the same journal. If you need, you can build another section or another thing for yourself, and then you can journal it in a separate area. That's up to you. But this is only one PDRA, a specific way of entering or looking for a setup, and a specific way of exiting. Nothing else. You are not looking for opposite liquidity that you can target. You are not looking for is there a fair value that can market respect and go higher or lower and hit my stop loss. Nothing. Entry, a stop loss in a specific place, take profit at 1:2. Depending on your stop loss, you will be selecting your lot size, not the amount of money. Amount of money will remain the same no matter what. If it is too big that it doesn't fit your stop loss size, even with the micro contacts, one micro contact is not still covering your max loss size that you set for yourself, you are not taking that entry. So are you clear that? So risk amount is always the same. Because if you change this risk amount, sometimes your 1:2 can happen within maybe 5 handle. Okay. And sometimes your stop loss can be 50 handle. So no matter what, you are not changing your amount. Your risk amount has to be the same. Decide. If it doesn't fit your budget, you are not taking that entry, and you are simply take the screenshot. Maybe on that screenshot you show that how big of a stop loss was there, or you can take notes, as I said, additional comments over there. You can write down, okay, it was too big, I couldn't take it. I hope you got the idea, because even if it's 100 handle worth of stop loss, with one macro it's $200. Sorry, one micro contact, it's $200 risk, and if it goes to your TP, it will be $400 as your profit. So doesn't matter if it's 5 handle worth of stop loss or 50 handle worth of stop loss. You are just adjusting your lot size, not your contract, not your risk amount. Because every loss you will take the same loss. Every profit you will take the same profit. So you don't have to worry about 20 handle, 40 handle, 50 handle worth of profit or loss that I'm getting. So I hope you got the idea. Fix the amount, not the lot for this one. So rules are said, everything is done. Now let's jump into the chart, and I will show you just a couple of days that I marked so far. Now the PDRA I'm going to talk about is IFVG. Let me remove these rules. I hope you have already written everything. Let's start from 20th January. I will start from there, which is 2 weeks ago. Okay. So what we are looking for is any clear swing high. It can be this, it can be as like something like this or something like this. I don't know. clean swing high or clean swing low has to be taken. Now this is the London session. Optional, if you don't want to do the London session, just avoid the entire London session, do just the New York session. If you don't want to do New York session, then whatever, like, I don't know, I have never traded Asia, so I don't have any idea about Asia. I trade London, so I cannot ignore London. I trade New York AM session. I have idea about New York AM session. I know some of the AM session that already you have to avoid, but I'm not gonna say or disclose the time window. You will find it by yourself if you do the hard work. This is for your work. Anyway, so London silver bullet started at 3 a.m. ends at 4 a.m. So this is your silver bullet window. Now by the time other people may get their entry or order filled, I'm already making my profit. How? Right, first of all, look into this specific window. Only this is the area where I'm keeping it this way. Okay, like 3 to 4 is my silver bullet, so the direction I'm not gonna change. Only London silver bullet, the direction I'm not going to change. Every other time window I will change my direction. You will understand, just give me a couple of minutes. Inside the macro, which is this and this line, it can happen outside as well, but I'm showing you inside because literally that's what happened inside the macro. This is the macro time. Okay, now I will show you something first. Inside the macro, you can see like it has taken this high, there is a swing high that clearly visible over here. This type of high is taken with this run. The first ever PD array towards the same direction that gets broken is your inversion. If you did not understand that, I will write it right here. Listen, when I created the London silver bullet strategy, again I'm saying when I created, there is no fucker who have ever talked about London silver bullet, how you are going to use it. No one. So till today, it's my strategy, the way I introduced it. No one ever pointed out those things. I'm the first one. ICT said, look into your time-based liquidity, session-based liquidity. Okay, I took that information. Look into this time window, how market works. I took that information. It's mine. This is also mine. No one said inside of macro or inside of this time window, you have to look it this way. Now let me show you this. The first ever, okay, like you are seeing it, market has taken liquidity. Now as I said, London's, I'm coming there, don't get confused at the very first example. So the reason I'm showing this one is because even if you didn't waited for this one, which I will never do, I will wait for at least 3 a.m. to happen and then towards my direction, my inversion to form. Now let's continue. Silver bullet, macro started. That was the highest bullish fair value prior to all this run and all this liquidity that market has taken. Just think, this is your clean swing high. Okay, you didn't see this high or this high. This is your clean swing high. Observe, no fair value gap here. Just the volume imbalance is not okay. I missed this part while I was talking. If there is a volume imbalance presented within those 3 candles of your fair value gap that you are going to mark as your inversion. So let's say, for example, this one, the one I have marked over here, you have a volume imbalance right here. So you can mark that as well. If there was one, you can trail it until that far. That will be your inversion. Anyway, the first fair value, if it breaks, you are taking the entry on the very next candle. You are not even like, if you get the entry on the next candle, you are taking it on the very next candle. Anyway, this is where market has taken liquidity, market has fallen. Now, I don't know if you would take this entry this way or not, but since it opened at the low, I usually use this one. Ignore this because this is not 3. So even if you take it, your stop loss, no matter what, whatever fair value you're using, the three candles that have created the fair value, you're putting the high or the low of those candles. So if it's a bearish inversion, you're putting at the high. If it's a bullish inversion, you're putting at the low. So let's say there was this. Okay. Now, okay. If you don't use this one, then before that there was this, which has literally taken liquidity from this low, and then this is the first time market broke that thing. So how you are using it is taking the entry from inversion, stop loss at the third candle's low of those three candle, whatever the low it has created. Now sometimes there might be a wick like this big. If that is the scenario, there are exceptions, but I don't really want to talk about exception today. Wherever the low is, you put the stop loss there. If it's a stop loss, write down a stop loss, because remember, you are risking the same amount. So if you are risking the same amount, I don't give a F about how big the stop loss was or how small the stop loss was, and how you can refine it or redefine it. I will explain it later, and you know what to look for at big wicks. But anyway, this is how you are targeting your 1 to 2 based on your no exception. Okay, this is something that I'm showing you. This is your stop loss on the third candle, 1 2 3, third candle slow. This is your stop loss, and you're targeting 1 to 2 based on that, no matter what, no exception. Okay, now let me remove this one. Let me remove this bullshits. Just stick with what I'm saying and what I showed. So there is literally no entry given over there, but since it didn't break by this candle, like until this candle closed, it didn't break, then it came all the way there. But if there was an entry, then it already delivered a beautiful 1 to 2. And I usually take this type of entries as well, but do not, just stick with the rules. Anyway, let's continue. So only the London silver bullet session, clear liquidity grab happened after 3. Market has, okay, London silver bullet direction. Okay, this is literally the high of the day, like where market opened and created high. All the Asia highs are sitting here. So you are looking for a sell short for 1:2. So this is that still. Let me actually remove this new week opening up. I don't need this type of information, but I will anyway. So this is where 3 silver bullet started. Your silver bullet direction is a sell short that you are looking for. Market took liquidity. First ever bullish period. There is no other fair value here. So this is the first fair value that market broke on this candle. The very next candle is your entry. Stop loss, no exception. 1 2 3. Third candle's high. That's your stop loss. 1 to 2 target. See that? Now here is the funny thing. This is what you saw. Okay, this is already inside the silver bullet. There was this one, but I don't really want to, like, it has cleared the sell side liquidity. It's opposite the direction. That's why I'm not willing to show the result of this one as well. But remember this inversion fair value gap. And remember that fall. Remember my stop loss. You might be thinking you got stopped out there. Okay, shit. Here, okay. So that third candle's high. All the way there. How far market has fallen. Anyway, that's the silver bullet zone of the macro. Now, if you want to figure out anything in between this window, again, only thing you have to look for is towards the direction, not any other way. But if you get the profit, you know what to do. Okay. Next thing. You got your profit here, but you missed it somehow. Whatever you have done, you move on to the next one. You got a loss, you move on to the next one. So for me, this window is 1. I'm keeping that 1. Coming to the next window. This is where the next window is. This is where clear swing highs here, 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 even here. Market has taken. There is no fair value gap here. Otherwise, I will say this is the entry point. I mean, that's literally the volume imbalance that you are seeing over there. Okay. However, if you mark that, that's where you got your entry. Okay, this is where you got your entry, and the stop loss could have been there. So like this, and then you could target, like you are seeing already what it delivered within this leg, but up to you. I'm gonna show the one I pointed or I marked, because macro started. Inside the macro, I can see it took a liquidity. This is a clear visible fair value. Also, that one is now looking visible, but it's like literally it's a volume imbalance. It's not a fair value gap. So this is a fair value gap. Market closed below on this candle, very next candle or whatever, the very next time within that macro it revisited. That's my entry, and this is the third candle. Doesn't matter. Okay, highest the market has within that range. That's my stop loss. Target 1:2, whatever. This is 2.06, but 1:2. Now, one thing. Okay, I was not stopped out. That's for sure. Okay, there it's not a stop loss. So I'll keep it aside. See, you are already in a entry. Market has came very close to a stop loss, and then it inverted another fair value gap. Why I'm saying another? See the macro. Market has taken this clean liquidity. The only bullish PDR it created during this was happening, or even let me show you something. You might say, okay, this is equal high. So how that is a swing high that market took. So let me put it there. Let me remove these two, because that was for that small fair value gap. This is a clean visible swing high. That same high cleared that liquidity. So can you see that is that as a liquidity? If this is a clean visible swing high market has taken inside the macro, it invert. By the way, remember, for it was showing me that market is willing to go lower, but it was literally sideways price action for a long time within that first inversion. But inside of that inversion, it literally gave couple more entries. Anyway, when you are already in entry, I would suggest not to take, but for your journal purpose, you may frame it this way. Like you are seeing here this entry, you are seeing here this entry, and wherever the 1 to 2 is, you can target with this. So since it created another one, and by this time you didn't get a entry, how you can maximize? Okay, this is the part, but don't worry about this. Okay, please just focus on a specific thing. How I maximize it? For example, if that was my previous stop loss and this is my recent stop loss of this setup, I will trail my stop loss until that far. So that 1 tick, 2 tick, whatever it is, I will trail by that much. But see the 1 to 2 of this one, it's coming here, and 1 to 2 of this one is literally here. So what would I do? If I want to close that trade at 1 to 2, I would take it there. But since this is also a new target for this setup, I can extend this one to this part. Okay, this is how you can do the thing. Are you getting the point? Okay, now this turned into 1:3. Anyway, so that's how. But this is an idea. Do not use it. Keep focusing on 1 to 2. I don't know why I'm just giving you some idea to break. After that silver bullet, the next silver bullet started. Inside the silver bullet, market has cleared these liquidities. Or if you don't want to use this as a liquidity, then you don't have an inversion yet, because market didn't break any bearish into bullish yet, or any bullish into bearish yet, because this high didn't take any high or any liquidity, so you can avoid it. I'm just showing you that even if you mark that as your liquidity and use the information I shared inside the macro, this is how your 1 to 2 looks like within literally a couple of minutes. So where was the fair value with volume imbalance broken? On this candle. The very next candle was your entry, which is this green candle. 1, 2. So 3 minutes you got your honest to 2. You get the hell out of your chart and computer. Anyway, so that's that part. If not counted as one, ignore. So this is 750 to 810. If there is a news at 830, which by seeing the candle I can see it, so you can literally ignore that entry. And that's why I'm saying, even if you don't count it, just leave it there, but it worked over there. Anyway, moving forward to the New York AM session, 950 to 10. Have any doubt that market is taking this high? All the previous liquidities, even these from the left, maybe more on the left, market has taken all those liquidities, and then even there is a visible swing high over here, this one. Okay, so from this to this, and then whatever you want to mark, there is a visible swing high. For a swing high, I want to see 2 candles on the left, 2 candles on the right. I clearly have that swing over here. So when that happened, remember, okay, don't you have a question why this is not inversion for me, right? Because that's not the macro. That's why macro is here, 950. This is 938. So that's not a macro. Anyway, only entry inside macro. By the time macro started, this is how far market reached, cleared all of the, like, lots of buy side from the left. You don't even need to look for that, as long as you are seeing the thing in between the time window. First fair value it created, broke below in here. Okay, this candle didn't break it. This is the candle broke, and that is when also the macro started. Inside the macro, you got your entry, stop loss at third candle high, target the 1:2, which is nearly 33.5 candle over here. Okay, so not a small profit, but whatever, you are risking the same amount, you are making the same amount, or you are losing the same amount. So it's it will never do anything, but overall, look at that. Anyway, moving to the next, you can see clean swing lows has been taken. Macro started 1050 to 1110. First ever opposite PDR 8 broke. Okay, so bearish, market was bearish. Sell side taken, lots of other taken from this low, lot of sell side taken. The last fair value, okay, you don't even have to go until that far. Just look here. This was the fair value. While market was taking the liquidity, this is the only fair value it created. Market didn't respect that fair value, broke above literally here, but since this is not the macro, you're not using this as your entry. This is the macro, it broke above. Inside the macro, you got your entry. This is your entry. Where is the third candle? Now here, okay. Look at that. You have a breakaway gap, you have a small fair value, you have another fair value, you have another bullish fair value that market is already respecting with the bodies. However, let's be transparent, let's be clear. What happened? It went to the next macro, and eventually it came back, hit your stop loss. Now here is the thing. What is this? This is the next macro, which is lunch macro. By lunch macro or next macro, market was taking buy side, clean swing highs. Okay, like it's higher highs, higher lows, higher high, higher lows. It was going that way. Remember, all this time I didn't mark a new day opening gap, new week opening gap, hourly fair value, 15 minutes fair value, 4 hours this, daily that, nothing. Only 1 minute chart, nothing else. Okay, so homework is with 1 minute chart. I will explain how you can utilize it using the hourly, how you can utilize it in between the macro times, if it's the session, everything guys. I said 2025, something big. You are still in the trade. This is where your 1 to 2 happens. If you put your stop loss all the way to third candles, since I said during the learning session, no exceptions. So you are not getting any exception, but I'll show you. Like, for example, if you have the knowledge, this is your breakaway, like this is a fair value gap, there is a small fair value, there is a fair value, there is a fair value that it's literally respecting over here. So why you need that long wick to hold the price? And also let me show you here, literally this is the C rejection happening already here. Or if this is your order block, that mean threshold is also covered by that candle's low, which is the breakaway gap candle's low. So if you put it here, you got more than 1 to 2 and a long ago. Okay, like literally this is where it already gave you 1 to 2, then fall, but no exception. So this is your stop loss. I don't want to be a guy who teaches you something that will not matter at the moment. So this is teaching curve, keep it simple. You see that using the knowledge of what I said during the macro, what market should not do. If it breaks, what is the direction? If it does, so you didn't get the entry here, okay? Like literally the candle, it broke, it never came back for your entry, but it already told you, like right before the macro, it cleared a liquidity. The highest or the first bullish fair value it broke, look at the direction. Don't worry, I have a lot of example like this because I had to go through this. It's a long way to show. That's why I'm not using reply mode or I'm not doing it the other way. I'm just showing you from hindsight data. And as I said, check all my entries in my Discord channel. Now a lot will make sense to all of you. And Shiva, you will be, you have to be little active for other people. Okay. So this is the 1250 to 1210 macro. Oh, by the way, this was the day market was supposed to close at 1. So if you see here, the time is 12:58:59, then 6 p.m. Okay, so it was closed earlier. It was closing earlier. So I hope you will manage your risk accordingly. Whatever it is, doesn't matter. Loss is a loss. Okay, so market closed earlier. That's why you don't have a PM session macro over there. Moving forward to the next silver bullet session. This was the Asia buy side, which market still didn't take. Okay, so why I'm showing this is the buy side. What is the Asia session? 8 p.m. to 12 a.m. So whatever it is, I'll just put it at a marker on 12 a.m. so that you will know the high between that 12 a.m. This is the high between 12 a.m. Market didn't take the high yet. Okay, like this is 3 already started, very close to the high, created relative equal highs with that, but it didn't take it. So very like during my silver bullet starting, market didn't take that high. Instead, market was very close to that, creating new relative equal highs. Now I hope that part is clear. So my direction is still towards the buy side. Silver bullet started right before silver bullet. You can mark this low was taken, or you can mark this low was taken, or even this low was taken. Whatever you want to mark, that was taken. If market is going for sell side, what it should not do? Should not break this fair value. Broke it. This is at the entry. 1:2 given. Now if you want, since look here, okay, I think I have already written, yeah, explanation needed. I will show you why this is a IFBG and this is not, there is no IFBG. First thing first. Okay, everyone, this part, if you don't understand, this is where you will see, or you will start to disbelieve the result, or you will think, since I'm showing the hindsight data, okay, since I'm showing the hindsight data, you will think that I only cherry picked the winning trades. So please listen very carefully this part. I can, what did I said? I'm looking for, in my silver bullet, the direction I have already identified, okay, which side I first want to go. Why? Because it didn't take the buy side yet. This is my first direction. Which direction I want to go? It's that. Okay, so this is the directional IFBG that I was looking during my silver bullet. It didn't take the Asia high or the buy side here. Okay, so my direction is still going towards that upside. Whatever higher time frame PDR, like if you watched my silver bullet video, you will know how I frame it and where I frame for the reversal. If there is no higher time frame PDR nearby, then I don't frame the reversal. I look for continuation. Whatever it is, forget everything. Simple, what I'm explaining, you will understand. Why my bias was bullish, that has been cleared. Because it has created relative equal highs with the Asia session high, and it didn't take it when silver bullet started. So silver bullet went higher, got my 1 to 2 at the very starting of the silver bullet. I'm done with my day. I don't need to frame this setup anymore, but I'm showing you so that you can understand. This is a very important part. Market has taken buy side liquidity here, and we all know it has already taken Asia buy side as well. So we can now look for bearish inversion if there is any. Okay, now I'll zoom it a little so that you guys can see. When this high happened and whatever you are seeing over here, look on this leg. Is there a single bullish fair value gap? No. Where is the bullish fair value that you have? First fair value, doesn't matter. Okay, if it breaks, you are fucked. The leg that has cleared liquidity, wherever the very first fair value of that leg will be, if it's broken and you are still looking for that same direction, you are fucked. I'm sorry. I know I have some sisters over here. I'm very sorry, but I cannot help it, because this is something I have been like anyway, this is my hard work that I'm giving for free. So I have to have that arrogancy in me so that you guys can understand the importance of this specific part. Nothing over here. Where was the first one? Again, you look carefully. Is there any bullish fair value gap? This was the first fair value of the entire, like literally from this swing low to this swing high, this retracement to this swing high. That is the first fair value. So did market broke it ever? No. Now here is the fair value gap. Why you are not using it as an inversion fair value? Okay, pause the video, look for the answer by yourself. If you don't find the answer, now I'm gonna say, this high, did it take any liquidity? This high. So does this fair value mean anything to you? Pause carefully, listen carefully. This leg, this high, didn't take any liquidity inside the macro. Remember, this is the macro. So this is 4 AM. I'm removing the 4 AM line so that you can understand. This is inside the macro 350 to 410. First of all, it never broke that fair value yet. So I don't have an inversion. But there is a bullish fair value it broke. But this high, did it take any buy side here? This high. Which high took? This high took. Which fair value you had to inverse? This fair value. Did it inversed? No. So does this fair value mean anything to you? This is nothing. I removed it. Now look. Inside your macro. Boom. Let me remove this line. And let me remove this line. You know, this is 410. Okay. So this leg is already 410 leg. Remove this line. Let me remove that fair value that I was keeping an eye on. Is this a valid swing low? Is this a valid swing low? Is this a valid swing low? Did market cleared some sell side liquidity The bearish fair, there is no fair value. Okay, there is only volume imbalances. I'm only looking for first fair value gap, then volume imbalance. So inversion, fair value. It's not inversion, volume imbalance. So keep in mind, inversion, fair value. Sell side taken, sell side taken. Market has inverted that within the macro. Where is the macro line? Here. Inside the macro, did you get your entry? Where should be your stop loss? 1, 2, 3. Third candle's low. You put your stop loss, take profit. Now maybe no wick candle, I would ignore it since I have already the profit, or maybe if I haven't closed all the position, I'm keeping the runner. That runner could go higher, but I might not put it there, wherever it is. For example, there is a no wick candle, there are some volume imbalances. By any mean, if you want to avoid this one, avoiding is up to you. If you are not confident, you can avoid. But if you took it, then this is the profit. Even if you put it here, which I am not saying you should be putting, because your stop loss is now for a different area and for different reasons, not for the inversion reason. So since it's a different reason, that's completely your own choice, but it also delivered that 1 to 2 within that leg. However, okay, let me remove this one, not move it higher, otherwise you will think everything I'm showing is IFBZ. So yeah, I hope you got the point. If it's a IFBZ and you are practicing it or you are journaling it, you are only journaling it based on the rules, nothing else. 5 handle or 50 handle, stop loss or profit, I don't care, and you should not be caring. And this is how I have the confidence, the psychology that you guys are looking for. This is how I build it, because I know how many times it works in a single day. There is a but. Why I wrote it, do you know? Let me show you. Some of these liquidities it's been taking, but unfortunately there is not a single bearish fair value gap that I can use as an inversion, or the only bullish PD array that market has created was never broken, even excluding the volume imbalance. If I'm using it as an inversion, what did I say? If there is a volume imbalance within your fair value gap, mark that as well. So your marking should be here. Why that is important? Because market, if it inverse, first it will go to retest it, it will retest that area. And sometimes, not like I believe 95% or 9% of the time, it will come for the original inversion fair value area. But sometimes that 5% time or something, it may reverse from that. After trading that level, it may reverse. So that's why I said, or sometimes what happens is a fake breakout happens inside of that area, a little bit of body comes, like little bit of body comes below it, reacting from that volume imbalance, market again goes the opposite direction. So to avoid the fake breakouts or to avoid any miscalculation, just add like this, because this is also a fair value gap, a form of fair value gap. But your main focus should be the original one. Anyway, it never broke the original fair value, it never broke that including volume imbalance part. So no inversion on the sell short, no inversion on the buy long. Why I'm saying sell short, no inversion? First of all, it never inversed, but if it inversed, because it has taken liquidity, clean swing high liquidity taken. So I could inverse that as well, but unfortunately it never. But what I said here is there is a but. Market is taking buy side. Market is taking buy side. Even if you can mark this one, it is taking that, and some from here as well. If you look on the left, you had some swing highs over here. Market has taken that as well. You don't even need to look on the left. After it did that, inside the macro, okay, I said there is no entry. There was one, but I'm just giving you this just for your learning purpose, just for your observation purpose. What the but I'm going to show here is there is a very small fair value gap right here. You need to zoom a little bit. There was a very small fair value gap, and since there is volume imbalance, maybe you could put it until that far, because what happened, previous candle closed here, next candle opened here, so this much of the volume imbalance is there. You could maybe put it until this far, and that's how far after breaking it market traded. Then boom 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 baba. Okay, so that's why I said there is a but again, I'm not gonna force enter you or force like make you take force entries. Even if I was there, I might not have used it unless this is happening inside of a fair value, like higher time frame point of interest. I know there is a 1 minute fair value right here, like literally this high is trading this huge fair value gap, and then there is a breakaway gap. But if there is no higher time frame fair value or point of interest, I may not have used just this one. I am seeing my change in state of delivery. I'm seeing the retest of that order block. I'm seeing the result out of it. I'm seeing the fall after that. And the only thing, it never changed the rule. High taken, buy side taken, more buy side taken from the left. The very first time within the macro, it inversed or it broke a PDRA regardless of the size. Market literally shifted like that way. And if you could take the entry, stop loss, third candle's high, target 1 to 2, and that was also happening inside the macro, because macro started here, ended here. Anyway, so observe how I read the price or why I am so good at trading. Next macro, again, sell side, sell side, sell side taking. There is a fair value, market has taken it, there is no entry, but if got on, it could still give you the 1 to 2. And remember, when I was showing the rules, what I said is, if any other PDRA you use, that's not as my PDRA or the one I'm showing, it's not according to that rule, you can create your other thing. In that case of scenario, market has given you this one as your change in state, or there is a small volume imbalance within that bullish fair value. So let me actually put it aside and let me draw this until this, and that's where it traded, then it went higher. But if you got the entry inside of this inversion, then it could have still given you that 1 to 2. Even that entry, it has given more than 1 to 2. Okay, keeping the idea same, that my stop loss is at the low, this is 2.13, and that is the 550 to 610 macro. This is where here buy side taken, some other buy side or swing high taken. There is no fair value gap here. This was the fair value. Market broke before the macro started. So I'm not, are you getting my point? This is the macros, 650 to 710. Market has taken some high from here. Market has taken some high, some high. Okay, so clear, visible, swing high, it has cleared. Macro started, fair value, it broke before, but during macro, that same fair value, where is your entry during macro? This is inside the fair value. This is inside the fair value. This can be a indication of entry, but if you took the entry, for example, after macro started, since it broke already, you took the entry, let's say macro started somewhere here or maybe here, I don't know, wherever it is. Stop loss at the same place. See, these two candles high was at the same place, but that was before my macro started, so I'm not counting this as my stop loss hit or something. But if you want to, up to you. Whatever it is, this is a gap open. When I see this type of gap open from my point of interest, if it even literally, if it creates a tick, I take that entry straight away, because this is the indication that market is extreme bearish. Gap opened, closed, down close. Look at that. See this? You might not understand what happened over here, or you may missed. This is the previous candle's close. This is the new candle's opening. Gap opened. What happened? Okay. So gap opening, keep an eye and observe, but do not if you don't get the entry, don't force it. That's why I didn't write anything, or I didn't show. And there is this bullish fair value that market inversed literally inside the macro, but as I said, this high didn't take that high. So my inversion is still this fair value, and stop loss entry, everything has to be based on that. If you think this is the entry, then that has provided more than 1 to 2. If you don't think this is the entry, we don't have an entry during this until this area. So clear visible swing low taken, more swing lows from left taken with this. Even I think this low was taken. Yeah, so this low was taken by a tick as well over there. After that, all you don't even need to look on the left. Okay, just look here. But I just showed to be clear what happened. After that, only bearish fair value market broke here. Oh, okay, sorry, I might have accidentally moved it or something. Okay, no. I draw it for a reason. Let me move it little right. See this? This is the 7:10 a.m. So it's still inside the macro. This candle literally gave you the entry at the last moment of the macro. You can take this if you trust the process. I would take that, but anyway. So yeah, and stop loss at the same place is target 1 to 2. It delivered like this. Now you are already in a trade and you have another macro starting. I don't suggest you to take the entry, but if you take the entry, if you add another lot or if you take another entry, then let's see. Clear swing lows has been taken. Entry stop loss was at third candle's low when at this area, because this is the first time it actually broke, and there is no fair value gap here. Volume imbalance, but no fair value gap. So stop loss at this level, and eventually this is maybe the first time we hit a loss. Okay, following the rules. But if you are inside this macro, I don't believe this is a loss for you. Whatever it is, if it's a loss, let it be a loss, and I'm happy to take that loss. Okay, or whatever. And eventually that entry delivered. And since this is already your target, if you are not stopped out over there, you could keep the same target as your previous one. And anyway, ignore. Okay, so ignoring the 950 and 850 and 910 macro, straight to the next macro. Mainly no entry, but okay, there was no entry because literally this is a high that it has taken. Okay, this is a swing high because I have 1, 2 candle on the right and at least couple of candles on the left. This was the fair value. It didn't, why I said no entry is because it didn't give me the entry. But if it gave me the entry would have delivered that 1 to 2. Remember, that's the third candle. That's why your stop loss is there. And 1 to 2 is literally here. So it didn't give me the entry. That's why I said no entry, but keep an eye. Okay, it broke, it came, took this low, it retest, came back, took this low. So far, no bearish PDRA was broken. Again came back, took this low. Okay, this was the first fair value, broken with the this is outside, but this is I wrote no entry, but I want to show something which is it's my kill zone, right? And this is the 10 to 11, the New York AM session silver bullet. 10:15 AM, 10:16 candle closed above the lowest bearish or opposite PDRA. It closed above that. Very next candle traded, then continued higher, and literally it was a massive bull run. And this is where the literally that's why I wrote like but or something, but you got my idea. Okay, we don't look into those highest level it reached. This is literally I'm showing you for 1 to 2, and this is that 1 to 2. And so far what you might think, oh, he showed only the winning trades, okay, like cherry picking winning trades. So yeah, like you can think this way, right? But did I change any of the rules? Looking for a liquidity, visible liquidity to be taken, the first fair value that it broke towards the opposite direction. Going to the next one, I wrote a but over here because there was a but, and no entry because I'll show you why there is no entry. So there was a very small fair value gap over here, which if you zoom in like this way, then you can see, otherwise you cannot see. And it literally closed at the top and then traded there and boom. However, using the macro, I will show, like I wrote it no entry, but I will show you. There was, maybe you might have marked this one, you missed that small one. But this one was important because this low has cleared these liquidities. And that big one, it has cleared that liquidity in that same run. So you can use, like you may think this one. It's the same thing because here I had no volume imbalance here, right? Market didn't give me the entry here either. If it gave, I could show another profit, okay? I'm not trying to hide it, or I'm not, what the hell happened? Okay, where is it? Here. Okay, so if it gave the entry, then it is a profit. It never came for that level one more time after breaking that fair value gap. So it never, this would be the stop loss and this would be the entry, and whatever the 1 to 2 is, it has, come on. Yeah, so whatever the 1 to 2 is, it has delivered more than that without coming back to that stop loss area one more time. But as I said, no entry, but, and you are seeing the result of the market after doing that. So if you could figure that out, you have seen that. Going next, no IFBZ I have wrote, but in case you guys are too conservative about your IFBZ, I will show you why I said no IFBZ. First of all, from this leg, okay, like what we are looking at, this area, if it broke any, first what we are looking, like if market was going higher, it has taken lots of liquidity, we know that. So I will just ignore that liquidity part just to make sure like you understood why I said no FBZ. I explained it, but again, from this high towards the low, there is no fair value, no fair value, no fair value. Okay, there is a small fair value. Did it broke? No. So no IFBZ on the sell short. It broke this one. This is the one it broke. Let's see. Any clean visible swing low that it has cleared? Any? Like 2 candles on the left, 2 candles on the right? Equal lows? No. Are you getting my point? There is no clean visible swing low that this low has taken. Is this your IFBZ? For me, it's not. If it was your IFBZ, and if you know how to use that long wick candle, then yes, then it's a winning trade. Otherwise, it might have been a losing trade. If you want to use it, for example, okay, here is the thing. This is a swing high because it has at least 2 candles on the right and a lot of candle on the left as lower high than this swing high. And this is a swing high. So this is a liquidity grab. But why this is not an inversion? I have talked about it, that market from when it is inversing that fair value, it's coming there. If there is a volume imbalance, you include that. if it's broken, then this is where you are taking the entry. Now watch carefully. Is there a volume imbalance? I'm not changing anything, guys. I'm not changing a single order of mine. Did it ever broke that fair value gap? So is this a inversion fair value? Why this is a volume imbalance until this far? Where did the black candle or down close candle closed? Here. Where did that one opened? Here. So from this to this, there is a volume imbalance. And that's why the fair value has to be drawn by this. I will show you examples from today. Again, the same thing that I'm showing here or sharing here, which is literally market has taken some highs over here. Market has oh, sorry. Damn it, that's outside. So this one, market has taken some low over here, even some lows from the left, clean swing low right before the macro started. This leg doesn't have a fair value, so this was the fair value. I could inverse, or market could inverse. Market inversed it, went higher, took the recent swing highs, eventually came back, hit my stop loss. So this is something that you can like as I said, observe if that happens at any given time or not. But if it happens, you can maybe write down like it took the recent swing high, then fall. Now again, on this leg, it has cleared some sell side liquidities. That's what I'm seeing right now. On this leg, inside the macro, no fair value gap, no fair value gap, no fair value gap, no fair value gap until this one. Just look all the way. This is 21st January. There is no fair value gap. Market has finished the macro, didn't even break the fair value. Finally, this was the break and this was the tap, and this is how far it went. Took that buy side, literally these relative equal highs, this high and that high, but this is not a swing high, this is just a high because one candle I don't count. Anyway, and eventually what it did, recent swing highs taken, fair value gap broken. So I believe I have shown you enough. Okay, so hopefully you guys will do the job, and good luck. Until next time, take a very good care of yourself, your health, and your loved one. Bye bye.